start recording here. Let's go ahead and put this on to OBS. And we are broadcasting, yeah? Yeah. Where did that come from? Oh, these are key levels that we set up earlier. That's right. That's right. From this high to that high. Mm, can't even touch that yet, so we're gonna flip that around. Where are you? There you are. I'm gonna get rid of that. That's a really wide area. And you're just as wide. You. Still gonna keep my fib open. But you actually should be flipped back. I want to see what this support looks like. So measuring a high point and a low point. And then everything else is in between. So first things first, we want to determine what is our goal for the day. Eat, eat.
home team, that's right, we're powered by movement now. Powered by movement means something, right? First one I want to bring on, I told you he was going to come on in a little bit. We'll go ahead and drop some knowledge for us in our market, right? It's our boy Chris is back. Chris, what's up? Drop some dimes for him. All right, so I'm
I did take out the sample, right? Okay. Oh, double coffee. Yeah. Boy, drink it. Oh, is it chicken? Oh, chicken salad? Thanks, babe. Okay. Great. So these are things that we're going to be talking about today. I'm looking at multiple different charts. Whoops.
One thing we're looking to have is Chris here. He is, say it again, approachable. All right, so make you guys reach out.
Hold on, guys. Sorry, I have like a meeting going on in the background on my damn phone. I'm just trying to get back to my charts. Thank you. Thank you. Thank you. Thank you. Thank you. All right, so I see the class is starting to fill on up. I haven't really started saying anything, so you guys are not behind. I'm just kind of mapping out what we're going to be discussing, what I'm looking at. I'm showing you a brand new chart, but at the same time, I also have, a broken down chart already in. What's Dixie doing? Yeah, see, that should be happening, and that makes sense. I don't know why he felt like it was necessary to pump there, but we'll keep going. All right, guys. So, anytime I open up a chart specifically and I haven't been trading for a while, or forget that. Maybe I've been trading all week and I need a new setup. I need something fresh. I want a plan to go off of. Right? You got to have a predetermined goal for that day. And if that goal isn't hit, it doesn't mean that you failed, it just means that part of it wasn't realistic. What I mean by that is, let's say you have $100 account and you want to take that to 5x in one day. The chances of that happening are slim. It's not impossible, but they are slim. And so if my daily goal is to book $500 a day, and that is my goal, then immediately I have to understand that my strategy is not going to be predominantly fixed on swings, if you will. It's going to be more of a scalp approach. And so if I know that I have to use a scalp approach, if you will, then I'm looking at lower time frames. I would say your 4 hour is going to be your highest, which that's what we're looking at right now. And then you want to work your way down to, 30-minute time frames. And then you want to look at 15-minute time frames. And then for confirmations in the sense of, is there a change in the market? You're looking at a 1 minute. So I'll break all that down, but the most important thing is to have your daily goals already situated before you even enter. We've said this before in our psychology class. If you're trading with an obligation on your mind, something weighing heavy on your mind that's financially related or income driven, your goals are going to get pushed around, and it's going to develop a lot of uncertainty. So setting a realistic goal, I believe the acronym is called SMART. specific, manageable, attainable, reachable, and timeable, right? So in short, you want to hit goals that are realistic and that you could actually meet inside of a time frame. You have 24 hours. You have 24 hours to hit X, Y, and Z number. If you go over that number, right? Let's say, hey, I want to make $300 for the day. That's what I want to do. And then you end up doing 450. Well, now you're over, right? So you've hit your goal and you've crushed your goal. A big part of what we talked about before in risk management and psychology is curtailing greed. So even though a goal is for profit, your goal also has to be for risk management. I have so many trades that I'm going to take in the day. I have so much that I'm going to profit in the day. I have a cap on how much I'm going to lose for the day. All of those pertain to your daily goals. So you look at your portfolio and you can make that assessment. You have to make obviously a smart threshold assessment, meaning I have $100, I'm gonna go full port. Oh, you want to start off smaller, right? Maybe 10% of your port, 20% of your port, at most 25% of your port. And then you start to think about, okay, well, if I'm using this amount, it's probably going to take me a little bit longer to get to my nut. That is part of the goal. So you set a realistic goal. If I'm only doing like $10 trades, $20 trades, can I do a 1x on that? Can I do 2x? All right, bet. Now that I've 1x that, close my position, then re-enter with higher profits. Now you have higher margin. This is, obviously rhetorical in the sense of you guys can see how numbers work when you're adding more to it. But where people get screwed up is that they definitely don't have a goal. They just want to enter and they just want profit. That's their goal. That's it. And I can see it in chat. I can see it in communities. I can see where people get liquidated. I can see the frustration in most folks. And I can tell you up front, there is no predetermined goal. They opened up their chart for the day. They're probably hopping into a Discord or a chat or community or Twitter, what have you. And they're like, oh my God, everyone's bullish. Oh my God, everyone's bearish. Oh man, I missed it. And what is that called? FOMO, right? FOMO, it will always screw up your plans. And so it's like I say, have a predetermined plan. It eliminates having that FOMO approach. So when I'm opening up a chart and I want to make, let's say, $100 for the day, right? Let's say my daily goal is I just want to do $100. $100 profit, and I'll do a max loss of $20 max loss. I'll do this in, I'll say 5 trades max. Close at end of day. Option. And I'll explain why that is in a second. So let me make this a little bit larger because you guys are probably looking at this like, what the hell does it say? Right. Move this crap around. Right, so I open up a chart and I go, okay, I want to make $100 today, but I'm going to have a cap at, max loss of $20. I don't want to lose more than $20 today. And so first things first, when you're looking at your $100 profit, you got to think about, okay, well, how much margin am I going to have to use in order for that to happen? I would say a $50 margin would be your cap, right? Because if I can 2x that, then boom, I've hit my profit. I've hit my my goal for the day. But also, if you go into, let's say, maybe like 20% loss on that move, then you're already at max loss for the day of $20. And just take a chill pill. This is the part where I think a lot of people get screwed up. They look at a chart, they have their goals. A goal doesn't get hit in the sense of positive, and something negative happens. They have a loss. And all of a sudden now they become revenge traders. Like, oh shit, I gotta get it back. I know I can hit this move. I know this is going the direction I wanted to go in. I know this is gonna happen. And to that I would say, well, if you knew that, then how come you have a loss? What I'm getting at is nobody knows where the market's gonna go. You just have to play the field. And sometimes you're playing the field based on your emotions. You want the market to go in a specific direction, and it's not. And rather than getting out of that position of a bad trade, you stay in it. There's nothing wrong with having bad trades. It happens all the time. I've had bad trades. The problem is staying in a bad trade, and you know it's a bad trade because the psychology is like, okay, I'm in the red a little bit. I'll stay in the red a little bit, and then this is going to turn green. This is going to go in the direction I want it. It's going to happen. It's going to happen. As many mantras as you can muster up, that shit doesn't work. It just doesn't. This is purely logical, right? So have that discipline going in, right? Write down your predetermined goals, and if you hit a loss, just chill. Take a break for the day. Don't go back in because you will lose more money. 110%, you will lose more money. I said before, 5 trades max. So if you're trying to do $100 profit, you have like $50. Start splitting that up into 5 different trades. Right, however you feel most comfortable about that. So I'm looking at my chart here. Let's put this into perspective here. First things first, I opened up a 4 hour, and what I'm looking at right now is a high, and then a low, and then we have a new high. So this high really doesn't matter. Oops. It matters in the grand scheme of things in the sense of daily. But if I'm trying to do like $50 a day, $100 in profit a day, that's my high, and here's my low. Right, so everything else in between here, this is part of an internal structure. It's not an external structure. This is an overall internal structure. But everything in between here, this is where you live. This is where you live the whole day. Right? And this is where I'm going to try to make all my money, make all my profits. And I say this loosely. What happens to the left doesn't matter in the sense of what your goals are in here. You're looking at the big map and you're looking for swings, you're an investor, depending on your strategy, yeah, you look to the left. But for the context of saying, hey, I want to make $100 a day. I want to be able to make profit there. I'm immediately looking at my swing highs and then my swing lows. Yes, this was a swing high, but then we put in a low, and then we had a bunch of just staying within the pattern. We had another little high here, small pullback, but then we put in a new high. So this is going to be the high that I'm going to be measuring off of. Now that I've identified that, what am I looking for? When I look at the whole picture, what is my trend? What is my trajectory? Am I bullish? Is this bearish? What does this look like? Well, to me, if I'm looking at this and I just see this pointing down, what would you think that is? It's bearish, right? We're in a downtrend here. This little pocket right here, we're in a downtrend. If you look at the overall scheme, it's an uptrend, but from right here, this is where you start getting into the nitty gritty. This wick right here, well, let me pause for a second. Anytime you guys see wicks, you have wicks. These wicks represent liquidation. It's coming up and tapping a liquidity zone. So let me move this up a little bit just because I'm anal like that. Right? This is representing some form of liquidity in this area. You could even go as far as calling this an order block if you're looking to sell. Does that look about even? Yeah, it does. So all I did, and I'll zoom in, super zoom. Top of that wick to the body. Right. But let it come to the body. It's going to be your order block there. right? And this is obviously on a 4 hour, so it's a higher time frame. Now I'm going to do the same thing when it comes to trends, right? Because look at all these wicks, 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 wicks. This one is complex. It's not straightforward. You could do it in multiple different ways. You can say, okay, well, from here to here, there's a liquidity pool. Here to here, there's a liquidity pool. And right over here, it doesn't know what it wants to do. I mentioned inside the chat earlier that the money man is out for a stroll today. This is what I mean by that, because it's coming in, tapping into liquidity, and then wanting to come in here, tap into liquidity, and then try to make a move down. And how do you know this is money man? Is because every single person's charts, including mine, when we saw this drop down, we all went, oh, look, it's a pennant. This thing's going to break on down. This thing's going to snap forward. Snap down. Every single one of us saw that. Right? And so money man made this a liquidity pool, taking out all those shorts. It just wrecked all those shorts. Everyone that came here and tapped here, that was a late short, it's destroying them. Right? And so it's the same thing right down here. This is also another liquidity pool. It can act as support, but this is something that you have to track because let's say you're bullish and you're like, hey, it's going to touch this trend line, and then I'm gonna grab it and then it's going to snap up. It could do that, but it could also go the other way, and that's kind of what it showed us right here. It has a hard time breaking above this. Most people entered short right here. Money man came in and said, nope, taking your lunch money. That's why some folks got stopped out and then it came right back down. And every single person that got stopped out and came back down, they're all sitting there going, God dang it, why does this happen to me? How come this has happened to me? They think it's personal. And so just breaking down your day and understanding where the market is going, it's going to help simplify your plan. This is not an easy move to take. It's not. So my personal recommendation for anybody that hasn't taken this move, shit balls, that looks good. So we could get a flag from here, but this flag is a little bit too high, right? So I'm past this 50, so I probably have to measure from here. So I'll give you guys a quick little tidbit. This was a high. We'll measure to here. So technically I can come to 0.5, which that's where I'm at right now. And I could technically still break down. I'm measuring my high to my low. This is a loose flag. There's high and tights, and then there's loose flags. So loose flags look just like this. So like in the flesh, guys, I'm literally mapping out a new plan. Nothing that I'm going to be changing alter my plan because I'm up. I entered way over here. Sorry, not even way that high. So my entry is on this body right here, on this order block. This was my entry. Just give you perspective. But now that I see this, that would make sense what Moneyman is doing, right? Moneyman's coming up to these liquidity pools, grabbing these here, grabbing these orders, grabbing these orders, grabbing these orders, grabbing these orders. And then pushing up to here, where more folks are going to come in and start longing right here, right? They're going to long right here in the middle. And then this thing's going to snap. When it snaps, it's going to take a lot of people's money real quick, real fast. Remember what I just said before. When you have long wicks like that, that's liquidity. It's the one thing I will give this flag is this. It pushed and made a new high based on this low. And then it made another one right here. The issue with that is that wicks don't count. You need the body. You need a whole body. So if this whole body filled in the next 30 minutes and then closed up here, I would be like, okay, the flag doesn't look like it's going to be valid. But when you have long wicks like that, that's just straight liquidity. You can become the liquidity or you can spot it in advance. So patterns obviously have something to do with liquidity. That's why you have all these long wick marks, if you will. Let me take this off because that might confuse people. So if this is my play for the day, I'm taking my fib from here to here. Does this measure out to still be a flag? Yeah. Should I have a limit order set at 1867.15? Yeah. Maybe I want to front run it a little bit instead of at 1866.15, front run it by $1. Yeah. And set my stop to 75. That's where you want to set your stop to. And so what I'm showing you guys is, this is my daily goal. This is my plan. This is where I want to be. Hey, how my steps go? Is there a way to grab all these? I knew there was a way to grab all these. So right off the bat, I'm identifying where I want to be. I would take one trade here. If I get stopped out right here, then I chill. Then I would have to chill. I got to tell myself, if this wick turns into an actual body and it doesn't remain a wick, then I may need to change my narrative. As of right now, I don't need to change my narrative because one, I haven't put in a new high. A new high would be somewhere over here. Just FYI, if anybody's curious, like, hey, what high are you measuring from? It'd be somewhere over here, right? For me to really change perspective, to become full on bullish, you need to put a new high above this, above here. So just look at your trajectory, right? Like just look where you're coming from and where's the direction that you're headed. That's where you're headed. May have a sharp pull down, so sharp pull downs can equal sharp pull ups. And I could see that happening right over here. So I would tell myself, okay, look for a potential long right here. I'd keep my short, but then I start hedging my long, hedging my long around here. 1793 as a possibility. But keep this in mind when you're looking at flags, bear flag, bull flag, it doesn't matter. It is a continuation pattern. So the trajectory is already going down. If it gives me a bear flag, then there's room to go down even further. So this is going to be my measured move. Is it going to come to that spot and stop? Probably not. Where's going to be the next best area? 618. Give your 618 some breathing room. Allow for this flag to play out. Maybe it bounces back up and, wants to come around here and then it comes down to here. So I would have my hedge long ready and available somewhere in this area. You can do it here if you want to front run it at 1793. Just be extra cautious to make sure that you guaranteed entry. But right here, this 618, that's where I would more likely look to hedge my long. All right, so now I have one setup here. All right, I'll enter at 67. Stop loss here. take profits. It's up to you. You know, the smart thing to do is to tame greed, right? So I would tame greed uh, right there. Okay, who cares if it goes down a little bit longer? You know, take that profit, sit on the side, and then wait. And then you just got to measure out what your investment would be, how much you would make in profit, and then that's going to be contingent on your leverage. So let's bring this back down. We've already established what step one is going to be. This is to help you refine your strategy, backtesting, right? Having a foundation is is key. What I just shared with you and what I just showed you, this is my foundation. I'm looking for liquidity pools. I'm looking for areas where it's going to break structure. I'm looking for areas where it is change of character. Right? So your change of characters and your break of structures, it's exactly what it sounds like. If price makes a move and makes a newer low compared to where this low was at, so right over here. Now, if we make a new low over here, where whenever this happens, and it's not the wick, it's got to be the body, right? So if I have a body that comes underneath here, you know, that's going to be a break of structure. I don't know why I just did that, but let's go ahead and fix that. What am I on? Hours? Right? That would be my break of structure. If price comes down to this line, straight to this line, and then bounces right up, well, you know that's money man. Money man is 100% in the market right now. And so when you see that, you got to tell yourself, either I can play with you because money man is institutional money. It's big banks. That's really what it is. Remember, they don't have a stop loss. They have gazillions of dollars. They can let their P&L run into the red for a minute. And so your stop loss is going to be their entry. So someone might say, okay, well, I'm going to enter in long right on here, right on this pull, and then it pushes down, takes all those longs out, takes all these longs out because they think it's going to go up, comes right here to the previous low, taps, and then goes up. That's your money man. If it breaks underneath, let's say it wicks, but then the body pulls back up and still rests against above this line, it's not a break in structure. You need a full body candle to break that structure. So an example of that would be pullback. So here's my pullback. Right, so you had a pullback down to here from this high. This is our high, our lowest low so far, and then we have another low right here, right? But that's a wick. So that's just a wick. I want you to focus on this body. It's this candle right here that broke the structure. And then it came right back and then flipped it. The very next candle came and flipped it. So it's weak, if you will. It's not a strong structural area. That's why I wouldn't rely too much on this low. It can become distracting. So you want to look for significant lows, significant highs. This is a significant high. This is a significant low. right? Those are significant. Still on 4 hour, guys. I haven't even gone down to the lower time frames yet, just to give us better snipe shots. But when I'm setting this up and I'm looking at this from a daily perspective, this is how I'm starting my day. It is, you can be on any chart, any chart, doesn't matter. This is how you want to start structuring. So like the reason I bring this up is because you have to start testing your theories, and that comes down to back testing. Some folks like to use EMAs for back testing, like if a 100-day and a 100, right? And then let me get a 200 in here. Okay, so maybe the 200 doesn't want to pop up or what? Thank you. So let's make this stand out a little bit more. It's too thick. Okay, so the theory would be is like, all right, well, if I'm relying on EMAs, because EMAs, although they are lagging, they're the next best thing next to price action to determine where it's going. So you have to start figuring out, if I'm going to trade a 100-day EMA and a 200-day EMA, the rule of thumb would be is when the 100 EMA crosses up on a 200, you're bullish. If I cross down on a 100, then I'm bearish. And so you've got to look back and go, okay, well, when was there a bullish pull? 100 came right to this 200. You can see that it's squeezed. And then look. This is a sell candle. This is a buy candle. Whenever you have something like this going on, sell candle, then a buy candle immediately following it, there's a little bit of imbalance in that area. Right? It's going to get wonky. So unless you have balls of steel, you're taking this trade on a long. There's nothing indicating that you should be taking this. Like there's no liquidity. Well, actually, there was some liquidity right here, right? Money man came in and said, okay, I'm gonna create a little pool right here, and that's what they did. Small little dip underneath it, and then fired off. Well, back to the back testing portion. What I want to highlight for you guys is developing your strategy means you have to go back and look at a specific indicator or price action or whatever your style may be, and then support that idea. So telling myself, well, I know when the 100-day and the 200 are laying on top of each other. They're just laying on top of each other. I'll give you the answer to the test. The squeeze. They're squeezing the shit out of all these shorts. Why? Because it was trajectory down. It made sense. A little bit of sideways movement, pump down, and then boom, bullish candle right next to it. Came up a little bit. Now, did make a new high. This is still a new high, right? Came and danced right on that 100 again. And look, the 100 wanted to do the exact same thing again. Get real close to that 100. Gave me a bearish sell candle, and then very next candle gave me a bullish one. So back to back, it gave you the answers to the test back to back. EMA is about to lay on top of the 100. Check my candles. Check my candles. My candles will show me a sell signal, then a buy signal. Sell signal, then buy signal. So what's leading after the sell signal? A buy signal. So this is more dominance. This is more bullish dominance than there is selling pressure. and just keep following the lines, right? Anytime this 100 decided to dip down and price came down with it, immediately found bullish absorption. Same shit. Strong sell candle right here, right? Because it put in a new high right here, even went a little bit higher, came all the way down to the 200, and then boom, booked a big fat bullish candle. That's just EMA, guys. That is just EMA. And so I can't tell you what strategy you should be following and should be doing, um, contingent on your trading style, right? If you're a scalper, if you're long term, like it just depends on where you want to book money for the day, book money for the month, book money for the year. And so over time, you'll start to develop these. You'll start developing unique strategies that give you an edge. So I'll use myself as an example. I'm obviously looking at structures, but as I've showed you before just now, as I'm looking at structure, I can look at structure like this all day long and I can see what's going on from a structure perspective, but I have no idea what's going on with those candles. I can see the wicks. That's about it. I want to see the data that's inside. And so part of my strategy is understanding candlesticks, understanding what that means when I have specific candlesticks that pop up. Doji candles, um, you name it, bullish engulfing, bearish engulfing, just different types of reversal candles. And so that is part of my strategy is understanding what those candles look like, being able to identify them from afar, or at least when I zoom in and go, oh, okay, I see what's really going on here. That's going to be your edge. And that's going to play into your edge time over time over time. I'm going to take these EMAs off for a quick second. Let's dive into a 15-minute real quick. All right, let's go 30. Hmm. 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 That makes more sense to me. This is me being a stickler. Right, so now we're hitting a 0.382. I don't know. I have a feeling we still come back up to here, but this is a changing character, right? So look, bullish move, bullish move, bullish move, bullish move, bullish move. Sell candle, sell candle. Literally absorbed this entire move up. Now look, now you have long wick, long wick. So it's literally running into a liquidity jam right over here. I have a fib that I like to measure. So let's go from the top down to the bottom. Let's change this to a 0.50 fib. I just have a 0.50 open on it. Technically, it's bullish, right? Because I'm over the 50% of that move. That's why you have to be cautious here. You got to be careful with your shorts and equally careful with your longs. I'd say careful with your longs because it went up and it served it right back down. So if I were to long and I was going against the grain saying, hey, you know what? I don't think this is going to flag. I think this thing's going to boom up. Then you would want a DCA around here. Just start building a little foundation right above on that 50 line. And then as price moves up, if you have a clear breakout, meaning it breaks out and then you have a candle that actually moves up with it, right? You'll probably do this. You'll probably go from there. And if it does something like that, that would make sense. It's a little crooked, but you guys get the idea. You'd want a strong, fat candle. That would make me close shorts that would make me look at, okay, when the retest comes back down to here, because there's always a pullback. You can't, you see a breakout, you can't say like, oh God, let me go long now. Like it's gonna take it, just like it did it right here. Everyone that saw this as a potential breakout, they started long right here. Money man just came in and said, nope, I'm gonna take those. And vice versa, right? They saw this big fat sell candle coming down. Some folks said, you know what, I'm gonna short it here because it's gonna break down underneath. All these people just got fucked. Yeah, see, this is nice. This is a good observation right here. It's gonna try to fucking rip that liquidity pool. It's trying to make a pull right there, but I don't think it's going to. Because it just edged up higher than its previous. So we just have to watch this. Because ideally, if we want for this thing to break down, remember we already measured that, I believe. It puts us way down here in these areas. If that comes to fruition. So this is what I'm getting at is, as a trader, you have to look at a market and go, I know when there's good entry and I know when there's bad entry. In between here, it's bad entry. It's just bad entry. You're going to lose on either side. You don't take these entries right over here. Your entry for long would have obviously been somewhere over here. Your entry for short was obviously somewhere up here. Can you take the short here? Of course you can, but it could be short-lived. You may find yourself, hey, you know, I'm just taking it to here, exiting and calling it a day. And then vice versa. I'm entering a long right here, and then I'm exiting somewhere around here. And it's difficult to get behind and not feel stressed out or feel like you're going to get stopped. You want clear-cut moves. So that's important when you're establishing your back testing strategy. That's important when you're establishing what your goals are for the day and how you're going to approach your day, just based on price action. All right, so we touched on what a daily goal would be. Now let's do our last piece of the test, and it's going to be understanding leverage. We kind of touched on this a little bit with risk management, right? And some folks ask, like, hey, do you always use the same leverage amount? This is my thesis. This is my theory. This is why I use the leverage that I use. I'm looking for an area where I can enter on liquidity or I can enter on an order block, whether that's long or short. I'm looking to enter on those areas, liquidity pools and order blocks. The strongest position that I could possibly take was where an order block meets liquidity, right? So this order block met with this liquidity over here. Try to punch through it. So price came up, sell signal. I have a diagonal coming in. So somewhere in this neck of the woods, it's still a little bit low if you didn't get in the order block. So what I'm getting at is this area, this whole area is okay if you entered into a short. Hopefully you took profit. But what I'm getting at is if your leverage is, 5x, 10x, whatever it is, and then you're looking at your P&L or at least your return on investment, you're like, I'm not making any money, or I feel like I'm just in a position forever and I'm only making pennies on a dollar, then it's okay to increase your leverage, but you don't have 125x leverage and you're trying to take a position somewhere inside here. You're only using a high leverage if you know you're going for a specific area that it's going to tap and then go in the direction you want. So someone that entered around here, it tapped, came right back down. Okay, they saying how was I able to know that it was going to tap here and come back down? well, just based on the data to the left, but let's say you didn't have that data. Let's say you only had this right here in front of you. Well, the next preceding candle literally tapped into it and came right back down. And so there are going to be, the market is going to serve you opportunities and chances for you to get in. You have to be ready for them. That's the reason why I'm using high leverage. If you don't have the time or the due diligence to be in front of a computer or in front of a screen to manage your risk at the same time, then you use low leverage. Low leverage, 10x. Sub 10x. Nothing greater than 10x. I'm not making that much money. I want to, I want to do like 200x, things like that. Okay. Then you use higher leverage, but you have to be able to treat this like it's a full-time job. Whatever it is that you guys do for capital to drive in capital so that you are able to trade, you have duties and responsibilities in order to make that happen. It's the same shit here. The only difference is you are the boss, you are the player. So the only person that's going to manage you is you. Hopefully that makes sense. So a quick segue for you guys before I dive into some questions for you is, as I'm mapping this stuff out, I'll go to my main map. This is my main map right now. I started looking for these swing points, and once I identified different swing points, right, where the market went up, came down, came up again, I'm looking for harmonic patterns. Right now, there's a deep crab that played out. I don't know how strong that's going to be because it'd have to clear wave B, which is 1876. It would have to clear that. Right now, I'm picking up, wick. This wick was filled, and wick. This wick was filled. So, these little pockets that you see right here inside, these are imbalances. The reason why these imbalances are important to me when I'm trading is because when the market goes up and comes down, it's going to fill those areas. Whatever it fills it with, it's going to be a swing point. So just looking at your structure, your overall structure, will help you identify how to find harmonic patterns. And remember, harmonic patterns are reversal points. They're reversals. They're not continuations. They are reversals. So I'm looking for a reversal, obviously, to the upside, but from these swing points. So I'm going a little bit heavier, but I have a anti-Gartley. That's what this one is going to be. And that's me getting down to 1814. Could it stretch a little bit lower? It possibly could, but the Gartley would still play out. Right now, if someone took this crab pattern just based on these swing points, there's nothing wrong with that. Nothing wrong with that at all. It's not a bad pattern. And that is the part I want to drive home with you guys when it comes to your strategy. My strategy, even though you and I are both harmonic pattern traders, understand that I may be looking at a different time frame than you and finding different swing points. Right? Someone may call this a swing point, but the reality it isn't. You know why? Because it didn't make a new high. This was the high. It came up right into this order block, but it did not make a new high. So therefore, I can't use this as a swing point, depending on the time frame that I'm on, but it's not a swing point for me. This is going to be my swing point. So this is why this one has a little bit more confluence for the butterfly. Excuse me, for the deep crab. The deep crab is a smaller one. It's this pattern right here. This pattern. I'll change that to white, just so knows what I'm talking about. So while you're charting throughout the day, some of you guys have been asking like, hey, how do I find harmonics, or how do I find stronger entries, or make sure that my harmonic isn't weak? You're looking for your swing points, and you're constantly tracking your swing points. Right? Swing points is something that makes a new high. Right? Had a low, put in a high right here. Pull back, no new low, no new high, no new high, no new low, new high, no new low, no new low, new high, no new low, no new low, new high. So I have 3 new highs. So once I broke this high on this candle, you see how it's a body? It's a full body that has left this area. That became a change of character. And then vice versa. Came right in here, put in not a new high, put in a sell candle, and then broke down. This is a break of structure. This is not a change of character, meaning it's not now bearish. It would have to put in a new low around here. Right, so inside this flag, it looks bullish. That's your structure. Your structure looks bullish. Your structure is acting bullish. Remember, we came back, we're going back and forth to a 4-hour. Let me go to this 4-hour because this one's a little bit cleaner. Right? This is your 4-hour. See, wick here came up. We can actually pull this down just a smidge, just so everything kind of flows together in that sense. Right? Because this body closed underneath. It's okay. So this would be a flag setup, and we're gonna find out probably here pretty soon. Well, because we have a new 4-hour. Yeah, a new 4-hour, 4-hour. A new 4-hour just began. I can come up and tap onto this 50. I can't come up to the 618 because then that invalidates a flag. And my measure move is going to be from the breakout, not from the top up here. My measure move is going to be from the breakout. So if I break out right here, boom, that's where my measure move should be. If I move up again, let's say I come here to this 67 benchmark, don't clip a new high, and then I start breaking down from there, right around there. So my measure move, just you guys are curious, came from my swing high to my swing low. That's my measure move. And so that's your play. You're looking for the short, and you have obviously you have a stop loss at 1876.89. You know, something like just $1 over. I'd go above this high right here because it would invalidate my my flag theory. It's not to say that it still couldn't come back down, but just a flag or a pennant, any of that stuff, it would just invalidate it. So big push up here with a strong wick coming down, like 80% chance we have that flag play out. All right. So what can I answer for you guys now that I've touched on, you know, understanding strategies, developing a trading plan, setting some goals. We touched on a couple things, but if there's anything specific that I can answer for you while you guys have. I'll save this one because this is the classroom. Everyone is solid. Solid. So no one's gonna say, "Hey, should I enter here now? I'm here now." This is a good example of them hunting liquidity right here. A little bit of imbalance right there too. Actually, there's a lot of imbalance right there too. It's not a strong order block. Stronger order blocks are up here. Take your time, guys. I'm just tracking the charts. This is specific and unique to you guys. So a lot of what I share with you guys, I won't share inside the chat, or I won't share necessarily inside of a stream. Or if I do, it's it's not recorded. So this is just for you guys. And what I mean by that is take advantage. Let's go to a 30-minute just because I want to see what's going on. Why is this so big? Oh, it's the box you made. I'm just gonna go ahead and get rid of that. Some shit. There we go. Yeah, it's good to peek at some indicators too. We'll take a peek at some indicators. Yeah, I mean, you have bullish momentum, but the problem with these indicators, number one, they're lagging, but number two, they're still technically bearish. Like your MACD is still bearish. Your MACD crossed over the signal line, and yeah, we're showing a hint of green, but anything underneath the zero line on a MACD is considered bearish. Same thing for RSI. These are lagging indicators. It's underneath the 50 benchmark. It's considered bearish, and it's right in the middle of the road. CCI bearish, like it's taking a breather. Squeeze, like it's taking a breather, but it looks like it's also losing momentum. Yeah, so this order block is the one that makes the most sense for me right now. On a plain side, can you talk about what is your view on having separate account for more degenerate plays? Does it do more harm than foul in the long term with self-discipline? Yeah, so I mean, everyone that kind of knows themselves, meaning like if you have a more of an impulsive personality, if you will, or more of addictive personality. Not saying you're addicted, but if that is your personality type, having a degen account where you're like, I don't care what happens, will help you kind of get that fix out of your system. The issue with that is like you got to be extremely disciplined to go, okay, well, on this other account, I'm more strict. I will only take plays that fall into my plan. A degen is more like it's randomity, right? So I don't do those. I mean, I have two accounts, but I treat them both like my babies, if you will. I don't think anybody here likes to lose capital, so it's just personal preference. But for me, on a personal level, I just don't do that. I'll run like a 74x or 55x, just depending on my margin size. Like if I get into like the 1K, 2K brackets for margin, then I'm using a lower margin, 55, 50, maybe 45. But when I'm doing like 100, 200, 300, 400, $500 margins, I'm somewhere north of 70x. But remember I said before, my leverage is correlates with my trading strategy, because I look for the snipe shots, I look for order blocks, right, to get in at the right time. Get some food. you're a 15-minute, right? You're on a 15-minute. Yeah, I think we come back and test this again. 67. This is just creating a huge imbalance, though, right over here. Like, that's all this is going to create. Let's just say it's bare minimum. This all has to get filled. Okay, so if it breaks through here, like at some point, this is going to have to get filled. Just an imbalance. I mean, ideally, if you really want to look at it, yeah, like this is a huge imbalance. Like all this space right here, just so you know. There's a one here too. Yeah, look at that. Like it's served up over here, but you still have this imbalance that has to be filled. Right, so like your imbalances are going to be, where you have like spaces, spaces, spaces. Like, those have to get filled at some point. And so right now, I think we need to fill back to the 4 hour. I think the 4 hour can fill an imbalance to here all the way to here, to be honest with you. Down to 1790. That would be ideal. That would be monstrous. And then we just kind of chill around here in this area before I want to make another move down here to the downside, 1625. That would be ideal. So what we're looking for right now, a 4 hour, like 15 minutes into a new 4 hour. Got another 1 hour session coming up. And they're trying to pull up harder. Yeah, I mean, you can, Mega, you can scalp on lower time frames. For me, like, that's just not my style. I do scalp, like, just depending what the market's going to serve me. But you're in and out. So I'm doing challenges and things like that. I think it would be difficult to give those calls where people can actually get in. So I've kind of conditioned myself to take more of swing approaches, and then they can ultimately they can turn into a scalp, if you will. Right, it's going to try to fill this imbalance again. It wants to try to come over here, push down, created this imbalance right in here in this little pocket right here. So now it wants to come back up and try to fill that. That's fine, but you really need to come back down here in order for that to make sense. Because let's say this thing just like skyrockets, then there's going to be huge imbalance, and the fall is going to be even harder than the rise. It's just a matter of being on the right side of the coin when that happens. My longs are going to come from down here, right? That's where I feel comfortable with longing. So taking profits for me is just contingent on what's going on in the market, right? Like if I'm trading a if I'm trading like on a larger time frame, then I'm waiting for those swing points to get hit. Come on, take that out. That's what we're looking for. I'm taking I'm taking profits on like swing B or wave B, if you will. I'm looking at probably like 25%, right? And this is on a weekly time frame. So let me go to my where are you? Right, so we have an anti-butterfly. Right, like wave C, which is down here, is 1625. Like this would probably be like an 85% close for me. And so if it comes and wants to tap on, wave B again, then I would enter into a short over here, but that's on a larger time frame. So now when I'm working, let me close this because that will get confusing. I'm working, like a 30-minute or something like that, and it just depends on the play, right? So like let's say I entered in short right here, and then we got here, and then that's a full scalp, 100% exit right there. Came down, saw the next candle. Next candle is showing me bullish candles. I'm at short, and then maybe you entered in long right here. I'd say okay, well I'm getting right here, and then it's 100% exit. Like so, there's no partials on scalps. Like you're in and then you're out. You're in and then you're out. When you're doing your swings, you're taking your partials along the way. And if you want to narrow it down to lower time frames on where you should be taking partials, then you're looking at order blocks. So I'm on a downtrend. I took a long. Let's say I took a long somewhere down here, right? And so I had a swing high. Okay, bet. So when I come back down to, let's say I made this low right here, I probably would have took partials right here. See what the next. This is unmitigated. That's funny. That's interesting. Got to keep your eye on this one right here and here. Unmitigated means like just it didn't even make a move down at all. It just literally opened and went up. Another clue that money man is involved. And so these areas will get filled again. These areas will get filled again. They will get filled again. Just a matter of patience. Steep up rises like this. Go ahead, do it. It would have just an equally steep move right back down. So that's what we would look for, and then to see what happens here, and then if it reclaims the 50 benchmark and moves down, then we Gucci. But we gotta monitor all this. Like if it breaks this order block right here, I'd probably close my short and then look for a re-entry around here. I see. Yep, it's coming right up to that change of character where it was also a break of structure. And it's doing the same thing. It wants to make this liquidity. Let's go to a 5-minute. Get rid of this shit. That's a vertical run up on a shorter time frame, right? You have a imbalance right here, shot up, imbalance, came right back down, so filled this imbalance. Now it's coming right back up to do the exact same thing, and it could possibly just come right back down to here. Oh, great, thank you for should the scalp account be portion lower in balance in general than the swing theory? It just depends on your preference. If you know, it's hard to say I'm a swing trader, but then you're looking for scalps, right? So that's just personal preference. It's to me that's just too much. There's too much going on. It could affect other plans and setups that I have that are more long term. So I don't focus heavily on the scalps. I take the scalps just because the volatility is there, and we're inside of a range. Like I'm super simple when it comes to scalps. I'm like, are we in a range, and have we been stuck in a range? Yes, great. Can I take a scalp here at the top? Awesome. But if if the volatility is not there and the direction's moving in one versus the other, then I'm looking for the swing, or I'm just sitting on my hands. Like this is tough. This area here is tough for anyone to gain entry and then sit comfortably in. So to that, I would tell that person like just sit on your hands. Like this is a complex move. Both sides of the coin can get pushed out. Bulls are trying to take the lead, but clearly when we get to a certain area, bears are like, we're gonna go ahead and push that right back down. All right, so we're getting into this. We keep tapping into this 4-hour order block. I have a 15-minute order block up here. That's what we tapped into earlier. But we keep tapping into this 4-hour order block. We're getting long wicks from that. We're not getting solid moves from that. Hindsight. Honestly, we want to break down from here. If we get a pump up to here, it invalidates the flag, but Moneyman is literally out, so he could literally push through that block, get us to B, and then come right back down. But this order block right now is serving pretty well. I'm on a 4-hour. I just measured from this imbalance right here. Sell signal, buy signal, then sell signal. And it pushed right through it. So this is going to be my block for right now. And then 15-minute, I think I have one as well right over here. Yeah. This one's thinner, but it makes sense because we had the same move, except we had a sell signal, unmitigated, bullish candle, and then we push right through it again. Six minutes to turn. Just stay right there. That turns into a shooting star, right? Because you have trajectory going up, and then this will turn into a shooting star, right? So I'm bleeding into, remember I said before, like I can look at structure all day long and look at it from this perspective and go, okay, where's the market headed? But this is my edge, and this is what I'm trying to teach you guys is yeah, zoom out, but then zoom in and look at what's going on. What's going on in that 15-minute data point, right? In this 15-minute data point, like bears are kind of like, I don't see us breaking back up into this, right? Which makes my short feel good. Should be over here. Put you like that. Yeah, see, that's why I mentioned earlier inside the chat is you had a changing character, put in a new high, busted this high, put in a new high, big fat candle, unmitigated. Look, look at this. Look, guys, look. No wick, none. No wick. Look at the top of this. No wick. 0. zero wick. Like you wanted to find a candle where the money man is literally in and chilling, right there. It's that. It's that. Because from when that candle opened, they completely controlled that session. They pushed it all the way to an order block, and then they pushed it right back down. That's why I say sometimes this is complex, because you can get your pockets emptied real fast trying to figure out what side of the coin you should be on. So someone that was smart enough that knew how to track order blocks and went down to a smaller time frame, someone like myself, I'm joking. But if you're tracking an order block, you're like, all right, cool, I got a pool up here. I got a bearish equity pool up here. Let me set a limit order over here, and it tapped in. It tapped in once, tapped in twice, broke out a little bit, a little smidget, and then it came right back down. Success leaves clues. So does the market. I'm gonna get rid of this because I know what this is for me. So any of you guys on the stream, when I'm talking about change of character and the break of structure in the same area, you guys know I'm referencing to this area right over here. Right, so this is a good one. This is a good example too. Right, you can see liquidity pools literally like everywhere. You can go from your wick to your wick. Right, everyone saw this big fat candle come up, and they're like, "Oh shit, it's gonna flag! It's gonna flag! It's gonna be a bear! It's gonna be a bull flag! It's gonna be a bull flag!" Everyone entered right here, expecting this to bull flag up, and why-ya-ya! I took all your lunch money. Why-ya-ya! Right, this is a prime example of why I set up these liquidity pools and start identifying them. It helps you identify if there's a pattern that it should be tracking a pattern, but it also lets you know if Money Man decides to step back in, who's he going to fuck? Retail. Their objective is not to make profit per se, it's to collect orders. Your institutional money, they have so much money that they're just literally chasing your stop. So I wouldn't be surprised if someone entered in long here and then they set their stop loss like right underneath here. Right, and so watch price just come like straight through that and then want to pull back up against this trend line, which is the pull. Then you have your short chasers or breakout traders, right? Because that's a different strategy. Someone's saying, okay, well, price broke out of this support system. I'm waiting for it to come and test it, and then I'll enter here. Well, Money Man can just say, I know that's what you're waiting for, and then push it all the way back up to this order block. So now all these late shorts that are over here are getting screwed. There's no order blocks here in this area right here. Like there's none. Remember, an order block has to meet a liquidity area. Order block, 15-minute, liquidity pull, right up to here. They go hand in hand. You take this short right here, you're Gucci. You are Gucci right now. Taking a short right here on this breakout with no order blocks. So there's a small order block right here, but it got pushed through, so it's no longer valid per se. But if you're sitting there trying to track an order block, an old order block, that's risky. That's assuming that the bears and institutional money is like respecting that order block and they want to push it back down through. So that's where it just becomes risky. And it's painstaking when you have folks that hop in there like, oh, where should I take an entry, or should I take an entry now here? That tells me they have no idea what they're doing when they're looking at a chart. And versus investing the time to figure out how to read a chart correctly, they much rather ask somebody to give you their 2 cents. That's not fair to someone else who did all the work. It's not. So if you're unsure of where you should take an entry, that's okay. Just don't take an entry. Go back to your charts and look at it, and then look for confluence with other traders. But the randomity, like, oh shit, I'm gonna long it right here. Like if someone took a long right here, only reason why this would make sense that someone took a long based on how I strategize is because price action is above the 50% benchmark from this move. Price action bounced off of a break of structure because this was a break of structure, right? It put in a new high, but it also closed. So this is still technically a break of structure. There was a pullback, but didn't make a new low and came back right across again with a close above it. Then it tapped onto it, clinging onto it, clinging onto it, clinging onto it. That would have made sense. I wouldn't call that random. Someone could look back and say, no, look, here are the reasons why I took that one. Liquidity was taken, right? Because tapped in, tapped in, tapped in, tapped in, boom, like liquidity taken, right? You don't enter long here because that's what Money Man wants you to do. I'm like, oh shit, there's a breakout. Let me keep going. You don't do that. You wait for the pullback, and here's your pullback. Pullback is right on the next liquidity pull. Then you enter long there. Like this would have been your setup right here, boom to boom. So if you took a long here, probably feel a little bit safer right now. You're like, oh, I'm in at 46. Could have turned into a scalp. This is not a swing. We all know this is not a swing. More likely, you should have had an exit somewhere around here, right on your order block. Yeah, you're welcome, buddy. Welcome home. Glad you landed safe. So this is a complex structure, guys. Ideally, like if we look back on this map, just because it's a little bit cleaner, this is the classroom map. You know, liquidity, liquidity, liquidity. Liquidity grabs, liquidity grabs, liquidity grabs. This candle, we would ideally just want to go test that 1846 and then just keep going, keep going. Get us to 1814. Oh shit, there's a fib over here too, 1811. That's pretty damn close, right? Somewhere in this area would be ideal. Then you take your exit, take your profits. You should do like 60% profit from there, right? And then see what the market does. See if you need to re-enter it back into a short or just hold. All right, good hour and 30-minute session. This was great. I had a lot of fun on this one, going over structures. Really wanted to give this to you guys so you guys have a better idea of what you're looking at, what you're looking for when you want to start charting patterns. Like this is essential for charting patterns and identifying patterns. Knowing where your liquidity pools are, knowing where your structures are, having your daily goals when you go into it, because if you're just looking at a chart and just specifically looking for a pattern, like there's no confluence to serve that up, right? So maybe your goal for the day isn't taking profit. Maybe your goal for the day is mapping out a successful setup. That could be a goal. A goal does not exactly have to be correlated to how much money you make or how much money you lose. A goal, it just moves you forward. So if you opened up your map, your chart for the day, and you had no map, and then you spent all day just trying to put together a map, well, guess what? You successfully handled the first part of your goal, and that was to come up with a map. Eliminate FOMO in the sense of like, oh my God, I got to hurry up and get in. The market will always be there, and it will always, always, always serve you an opportunity to make money. You can make $1, you can make $1,000. It just know that. Like, so don't rush into a position. Same thing with your exits, right? Don't rush out of a position because you have paper hands. Make sure that price has to get to a specific area. But what if I lose all that profit? Yeah, you could have lost profit. Yeah, you could have closed your short here and then say, hey, you know what? I'm good with that profit there. That's based on your temperament, right? But if you have more endowment with your patience, right, then you're telling yourself, okay, if it reaches here and it breaches here, then I need to exit my short because the next move is going to go up a little bit higher. and you gotta run that game. Sometimes you gotta walk away from the screen because you're like, oh my god, I'm gonna exit, I'm gonna exit, I'm gonna exit, and then when you do exit, and it goes in the direction that you've always been wanting to. You're gonna be chasing a position, and that's hard. That's hard to stomach, if you will. So, um, once this recording's done, I'll pop it into the stream for you guys. If you guys have any questions, anything that comes up, just shoot me a message. I'm gonna go grab a bite to eat. It's 12:30 my time. I need some food so I can continue charting. But other than that, thank you guys for coming on out, and love and peace. See you.